I'm Matthew Galgani with the In the Spotlight video for the April issue of IBD Extra. What do winning stocks usually do just before they surge? Form a base pattern like a cup with handle or double bottom. These bases have repeatedly appeared in the best stocks year after year, and they're often launching pads for big gains. They literally show you the best time to buy into a stock. So learning to spot the shapes of these patterns on a chart gives you a huge advantage. But once you've spotted a base, it's also important to check the price and volume action within that pattern. That helps you separate between a healthy base and a faulty one. Let's see how to do that. We'll use Radware Limited, an Israeli maker of web traffic management systems, as an example. It formed this cup with handle from April to August of last year. One thing to look for in a base is accumulation, to make sure that big investors are doing more buying than selling. To do that, count the number of up weeks and down weeks within the base. More up weeks means accumulation, more down weeks indicates distribution or selling. Radware showed accumulation with 10 up weeks versus 9 down weeks. But note that not all down weeks are created equal. If you have a down week but the stock closes in the upper 60% of its trading range for that week, that's considered accumulation. Here are two examples of that. The horizontal line indicates where the stock closed for the week, and it's clearly near the top of the range. This type of action is viewed as institutional buying, since the stock has shown some strength by finishing well above its low for the week. Another thing to look for is light trading volume at the lows within the base. Radware pretty much fit that bill. Here are the lows within the base. And you can see down here that although volume was above average this week, it lightened up over the next 3 weeks, including the week of the lowest point in the base, which was here. You also prefer to see tight rather than loose trading action. Tighter trade indicates less volatility. Radware comes up a bit short in that regard. You see more big price swings than you would prefer. Here's an example of what tighter trade looks like. You can see the trading is more controlled without a lot of big swings. It's also positive when you see closes near the high for the week. As you can see, Radware had several of those. That's another way you can see that investors are more positive than negative about the stock. Last but not least, look for volume to lighten up in the handle. That shows you it's a normal shakeout that weeds out weaker holders rather than a major sell-off by big investors. Here's the handle for Radware's base. Volume was higher than you'd like to see in the handle, but it was trending down after the first big week up. So the positives in Radware's base outweighed the negatives. It broke out in August of last year and gained as much as 79% over the next 6 months. The next time you're reviewing a base, try running it through this checklist. You'll quickly see if it's a faulty pattern or if it's a base with the potential to generate big gains for your portfolio.